for families in the North Texas area. So our job is to give you the max refund that you are allotted, also providing you with some tax saving incentives if needed as we're going through your tax return. Again, we have 7 locations, which you'll be able to see those, and we're going to start opening up on January the 23rd. So who are we? We've been serving the Dallas community since 2009, and we prepared more than 120,000 plus tax returns. And we are the largest VITA site in the North Texas, again, because we have 7 locations. We can also refer to you to other site locations in the DFW area. We have a sister site out in Arlington. You're always able to go to the irs.gov website and type in VITA, the VITA, and put in your zip code if you want to locate the nearest VITA site. Most of the time, you're going to see most of the VITA sites, they're probably some type of nonprofit or public library. And majority of our sponsors are through the City of Dallas, United Way, as well as the IRS that allows us to provide these services at 0 cost. And all of our tax returns are prepared by certified, IRS certified preparers. So all of our volunteers, they're signing up to come in, learn on how to prepare these tax returns. And so majority of our tax returns are prepared by volunteers, but someone like myself, we come behind the volunteer and we actually review their work just to make sure we do have another check on there, so which is called a quality review. So we definitely want to make sure all of our clients that they are very confident that they are getting the best return as well as the best service. Again, so a little bit about myself. I've been employed with Foundation Communities since 2017. I'm actually the site coordinator at one of our sites, which is in the North Dallas area called North Dallas Shared Ministries. I'm also the tax training coordinator, so I'm providing the material for all of our volunteers, and we all certify at the advanced level. So there is the basic right below that. So we make sure that everyone is certified at the advanced so that we can serve more tax clients. And so why am I doing this? I love tax preparation. My background is accounting, and I just enjoy educating tax clients as well as volunteers, just on the update of tax laws, changes, and ways that you can actually have some tax savings. Just so you're more aware of as things are going on, you're more informed and educated with your tax return as it's being prepared. You're not just receiving your tax form, or we're just not e-filing it, so you do have some knowledge. So if you decide to go to any of our 7 locations or any other VITA sites, what do you need to bring? You definitely want to bring a photo ID, making sure that it's not expired on there. So it could be a state ID, it could be a driver's license, a passport. For our students that are probably still in high school working, a student ID. We would need the Social Security or I-10 cards for everyone that is be listed on the tax return. So that's taxpayer, spouse, or dependents. All tax documents. So that's W-2s, 1099. So all source income, we would need that to be brought in order to prepare the tax return for you. If there's health insurance documents such as the 1095A, we would have to have that form. So that 1095A, that is if someone has health insurance through the marketplace, which is commonly known as Obamacare, you would need to have that 1095A form. And if you are receiving a refund, and if you decide that you want to have that refund direct deposit, we would ask that you bring your bank routing and account information on there. A lot of people have it on their cell phone, so you're able to pull up your account, or you can bring a bank statement. And then, of course, everybody does not get a refund. There are cases where people do have to pay. They owe at the end of the tax season. And so you also have the option, if you want us to put your bank routing account information into the system, for the IRS to draft that payment out of your bank account. So we would need your bank information from there as well. And then just sometimes we may want to, if you want to, just to help us bring your last year's tax return on there. That just kind of lets us know maybe if a person had sold some mutual fund or stock. That lets us know if there was a carryover loss, as well as we're just kind of trying to bounce back from COVID. There may be some individuals that took advantage of the retirement distributions, where they pulled from their retirement early and they actually elected to report that income over 3 years rather than reporting it in 1 year. So before I go to the next slide, I don't know, Annie, do I need to answer any questions?
Yeah, there is a question in the chat there. Do you see Marianne's question for clarity?
Let's see.
Yeah, so I'll read it to you. She
Okay,
asked,
yes.
Okay, you see it there?
You can, if you don't mind reading it to me.
Yeah. So if I hadn't filed my 2021 taxes, I need to bring my 2020 tax return to your office.
Correct. No, that's a very good question. Yes. So if you haven't filed your 2021, yes, we would ask you to bring your 2020. And since you mentioned it, we would probably also ask you some information on your 2019 return as well. Just because during the period, during COVID from 2020 and 2021, there were a lot of tax law changes, some updates that were just effective for those particular years. So I would say also want to bring your 2019 return in as well, and we would be able to we will be able to prepare your 2021 and 2022 return.
All right, thank you, Lakesha. That was the only question thus far.
Okay. So these are our tax prep locations. So you can see they're all around the Dallas area. So I would say our furthest location that we have north is the Fretz Park Library. So that's right on the outskirts of Dallas and Richardson. On there, then we have our North Dallas Shared Ministries. That's in the North Dallas area right there by 635 Walnut Hill 35 area. And then as we kind of make our way down south, we have our Martin Luther King Center. So that is the what I still call the South Dallas area near the Fair Park. To the east of that, we have our Perry Creek Library in the Pleasant Grove area. And then as we kind of go a little further, or maybe more so west, we have our West Dallas Branch Library, which is located off of Singleton. And then we have our Hampton, Illinois Branch Library. And then we have our Concord Church on there. So that's about as further south as we go with Concord Church. We will also again have a mobile team that will be also working with partners such as Parkland Hospital, also some schools where they're creating appointments, and they're just maybe 1 day out of the month, they will go to that site location and prepare tax returns. What you don't see is there's going to be 2 Saturdays out of the month. There's going to be a VITA drive-through. And so that's also going to be an area in South Dallas. The location, it is called Southern Bible Institute and College. You can check out that information on Facebook. So if you're not able to go to one of these sites, or maybe one of the sites are congested on a Saturday, then you are able to go to that location, which is a drive-through location. So you'll see more information about that when we go to those that location on Saturdays. We'll definitely have that on our Facebook page, as well as boosting that as well. So what we have right now is for any tax return, if you have any tax issues that you feel like maybe the IRS has sent you letters, you've just been waiting for a while to actually have the IRS to address your question. You sent some information in and things are still lingering. The IRS, they are still backlogged. They have hired employees. It kind of seems like maybe they're going through training, gearing up for the tax season. but the IRS, that you are able to make appointments to go to the IRS. Now, we did have a call this past Tuesday, with our spec represent. So that is an IRS employee that's dedicated to our site that gives us updates of things going on at the IRS, things that we should know. So just kind of some more helpful tips on how we can direct our clients. So he did mention that the IRS is kind of like a month out for appointment. So if you were to call the IRS now to make an appointment, you would not get an appointment until mid-late February. So these are the locations in the DFW area. Sometimes they may open up another one during the tax season. And the IRS, based upon that conversation, announced that they're going to have one Saturday out the month, starting in February, where tax preparers will not have to make an appointment. Now, those dates, they've seen a rush. They did it last year, an increase in number of people at the office location. So you probably will want to get there as early as possible. But you can go on the IRS.gov website. And if you go on there and you click on the news, you should see some information about when they will have those no appointment Saturdays, excuse me. But I'll also have information at the end of the slide. If you text us and follow us on Facebook, we'll definitely keep you abreast for those dates.
Hey, Lakesha, we had one question come up from Whitney.
Okay.
And this may be something you're going to address in a little bit, and just let us know that if so. Any big changes from last year's filings to this one?
Yes, there are some big changes. And so what I did throughout the presentation of the slide, again, with COVID, I've actually went back as from starting with 2019 coming up to 2022, letting you know what those changes are. And so if those are applicable to you, you'll definitely be aware. But yes, there's definitely some changes, and I have that built into this presentation.
All right, thank you, ma'am.
You're welcome. Okay, and so here we are for those tax updates and changes and tips. So for 2019, if anyone has to go back, so we do pass your tax returns. Our software will allow us to go as far back as 2017. I've highlighted 2019 because someone who has not filed their 2019 and they historically are due a refund, this will be the last year to file your 2019 to get that 2019 tax return completed and receive that refund. So the filing season, it will end on April the 18th. Just because the 17th is a holiday in DC. So an individual would need to get their 2019 postmarked by April 18th in order for it to be considered filed timely and to receive the refund on there. And again, you're to hear me saying that that's just for those that are due a refund, not those that have owed on there. So the biggest thing for 2019 was there was the zero healthcare penalty for not having health insurance. If you remember, in prior years, if you did not have health insurance for an adult individual, it was $695. That was the base on there for an annual, for not having for insurance annually. And then also for our contract workers, sole proprietors, those individuals would have received a 1099 miscellaneous box 7. And so I've just highlighted that is just because going forward, the form that a sole proprietor or contractor received changed going forward. Okay, so going into 2020, and so with a lot of these changes actually kind of took place like mid-COVID, where a lot of people had already started filing their tax return, and the IRS actually kind of did some updates. I believe it was like February or March. And so they had to go back and retroactive some of these updates. So the first one, if you haven't filed your 2020, was the unemployment, up to $10,200 per taxpayer spouse. of unemployment was non-taxable. Historically, unemployment, it is taxable income. I believe this is the second time that I've seen, or that I've been preparing taxes, that there was a certain amount of unemployment that became non-taxable. So if the taxpayer and the spouse, if they both receive unemployment, that would be the $10,200 for each of them that would apply. And have you, as you heard me earlier, anybody that took an early distribution from their retirement, their traditional IRA, their 401k, their pension, on there up to 100,000, they had the option of reporting all the income in 1 year or spreading it over 3 years. So just depending on how significant that distribution was, determine if they would want to report it all in 1 year or spread it over 3 years on there. Then also for the early distribution, pretty much a lot of individuals, that penalty, if you didn't reach, if you took the early distribution, meaning you were not 59 and a half, there were no other exceptions, typically there's that 10% penalty, but a lot of people, that was waived for the early distribution for the 2020 tax year. So again, they were not hit with that 10% penalty on their tax return for that early distribution, as well as the option of spreading it over the 3 years. Also, like I mentioned, for as a lot of people, they did receive unemployment, whether that was maybe a decrease in income, maybe their job closed down for whatever reason. So there was a lot of decrease in earned income. So that's like wages, self-employment income. And that self-employment income, W-2 income, determines the earned income credit as well as child tax credit that an individual qualifies for. So what the IRS did was allowed individuals to take a look back at their 2019 tax return and look at their earned income. So if your earned income for 2019 was higher and it produced a higher earned income, you could possibly use your 2019 income on your 2020 return just for the earned income credit and child tax credit. So what we did with clients was, after we input their 2020 information and we saw that maybe their earned income or child tax credit was low, or most of their income was unemployment, we could then ask them to bring in their 2019 or go back and look at their 2019, see what their earned income credit was, their child tax credit was, and there's a placeholder in our software that allowed us to put that information in. So that earned income credit, and it's going to calculate, their earned income, and it's going to calculate the credit based off of that income. So that was something that was new for 2020, and we actually kind of did use it for a few of our clients. Also, the additional child tax credit for 2020, it was for $1,400. And I talked about the 1099 miscellaneous box 7. Well, for 2020, our self-employed, those sole proprietors, that form was no longer used. It now became the 1099 NEC, and there was only that one box, box 1, that has that income. And I think because of 1099 miscellaneous, it has so many boxes for other types of income, where I think those that were issuing it were kind of confused in some instances. So maybe when it should have been treated as income, maybe it was prizes or awards, or box 3, other income. When it should have been other income, it was classified as non-employee compensation. And so whatever amount that box is in, when you put it in the system, it then determines where it goes on the tax form, the form 1040, and if a taxpayer is subject to additional tax. So that form is important. Also for 2020, a lot of individuals just were giving to charity, and also just to kind of more incentivize individuals. So in addition to the standard deduction for whatever your filing status is, single, head of household, married, filing joint, you were able to take an added up to $300 to add it onto your standard deduction for a charitable deduction. So that's for any contributing to your church, your temple, your synagogue, any type of 501c3 organization For a single person, if the standard deduction was $12,600 and they contributed to their church, and if they contributed $500, they would have added that $300 to the $12,600 for their standard deduction. If it was just $150, that's $150 that's added on to the $12,600. Also, what they had for 2020 was the self-employment tax deferral on there. So those individuals, they were giving them additional time to pay. So typically, if you owe, your taxes is due around that April 15th deadline on there. That's when you have to make your payment. That's the payment that, that's the due date before, so that to pay, so you won't be subject to any interest or penalties. But for 2020, they allowed them to break up that payment in 2 installments. Also for 2020, this is when we saw the recovery rebate credit. So they started releasing out what we know as the stimulus. So there was a first and second stimulus that was released. The first one was $1,200 for any taxpayer spouse, and then it was an additional $500 for dependents that were 17 or younger, I believe under the age of 17. And then the second stimulus, it was $600. So $600 per taxpayer and a spouse, as well as $600 for any dependent under the age of 17. So now, because they have stopped sending out the stimulus payments, they've used all of their other connections with other government entities. So working with Social Security, they released out all the stimulus payments that they are going to send. If a person did not receive the first or second one, and you're sure that it did not get, the first stimulus did not go to child support, you would have to file a 2020 tax return in order to claim the first and second stimulus. So that's the only way an individual is able to get the first and second stimulus now. Going forward is filing a 2020 tax return. There's also, because a lot of workers, W-2 workers, they were able to receive sick leave. So during COVID, when you had time off, you were supposed to be eligible, still be eligible for payment. Well, that was different for those self-employed individuals. Once they got sick, there was no way for them to receive compensation or keep up their compensation. And so what the IRS allowed was the self-employment sick leave credit. This was maybe if your child's school closed down, you were unable to get daycare services, you yourself, the self-employed individual, caught COVID, or if it was someone in your household that you had to take care of, you were able to qualify for the sick leave credit, making this a refundable credit. And also the good thing about this credit was you're able to use your 2019 information for this credit. So if your 2019 income, net income, self-employment income was higher, then you could use it for your sick leave credit. Before I go to the other slide, is there any questions about the 2020 tax year?
I don't see any questions in the chat.
Okay.
I think we're good for it now. Thank you.
So on to the 2021 tax year. So this would be the second year a person that took an early distribution that they would have the opportunity to spread it over 3 years. On there again, it was electing either for 1 year or 3 years. Also for 2021, anybody that is self-employed, those sole proprietors, contractors, if they had food or beverage expenses paid to a restaurant, and it was for your meeting new clients, existing clients, customers, business partners, business interests. And again, if it was paid to a restaurant, you could take 100% business deduction. In the past, it was a 50% deduction. So for 2021, 100% was allowed. Again, the charitable deduction added to the standard. It got modified where it was up to $300 for any filing status other than married, filing joint. So single, head of household, qualifying widow, widower, or married filing separately, they could add up to $300 on top of their standard deduction if they did a charitable contribution. And then it was 600, up to 600 for a married filing joint couple, in addition to their standard deduction. Now, one big thing for 2021 was the child independent care credit. So typically in this credit is a percentage of the dependent care expenses. So it goes up to 50% of a person's expenses. And it was allotted to $3,000 for one qualifying child, $6,000 for two or more qualifying child. But the IRS, they made the child independent care, they made it non-refundable as well as refundable. And they even bumped up the amounts. So for 2021, it was $8,000 for one child, $16,000 for two or more. So if someone actually spent over $16,000 in child care for their dependents, so these are those for children under the age of 13. It could also be someone in the household that is incapable of self-care, or a spouse that is incapable of self-care. If someone actually spent over $16,000 for child independent care for individuals in their household, they were going to get that full $16,000 back on their tax return. Part of it would be a non-refundable, which was reducing their tax liability. And then another part of it would be a refundable. So I believe they were splitting it like 50-50. So this was definitely something that we told individuals, if you had childcare, go back and bring your statement. You do have to have a statement from your provider, or if it's an individual, a statement from that individual that has the amount paid as well as their social listed on there, social or EIN number. Then we have the child tax credit. So the child tax credit for 2021, they increased the amounts and they made it refundable. So they kind of took away the additional child tax credit, which was the refundable portion. And so for the child tax credit, they actually increased the age. Typically, the child tax credit is for those qualifying children under the age of 17. Well, they moved it up. So it would be the child tax credit for 2021 is for those children 17 and younger on there. So they just added on a year, as well as they increased the child care credit amounts. So a child under the age of 6, you qualify for $3,600. Ages 6 to 17 qualify for $3,000. And what they did was, instead of just waiting to file your taxes, your 2021 tax return, they actually started sending out some of this child tax credit as an advance. So from July through December, some tax clients got a portion of the child tax credit as an advance. So $3,600, a person could have gotten up to $1,800 for the child tax credit. And then $3,000, some people could have gotten up to the $1,500 per child on there. And so that was reconciled on your tax return. So the IRS did send out letters letting the taxpayer and spouse know how much they actually advanced for the child tax credit. If you did not get the child tax credit, the advance, have not filed your 2021 tax return, all of that would be listed on your 2021 tax return on there. If there was anything that was off, if a person, they stated on their letter that they did not receive the full amount, we did ask them to go back and check their bank statements. Again, so when we process a tax return, the IRS, they're actually able to check it against their system. So they will verify the actual amount of child tax credit advance payments that were already received. And so also, you were still able for 2021 to use your 2019 earned income for the earned income credit and child tax credit. Also, one big thing that they changed for 2021 was the earned income credit. The earned income credit historically is for at least the minimum age is 25 and going up to age 64. And this is for the age limit if you do not have a qualifying child for the earned income credit. Well, for 2021, they opened it up. It was 19 up to any age. So as long as the individual had some type of compensation, W-2 income, non-employee compensation, they qualified for the earned income credit. Again, we still had the self-employment tax deferral. Also, we still had the self-employment sick leave credit. That's at the very bottom. Sorry, cut off my slide. And then we have the third recovery rebate credit. So that's the third stimulus. So that was $1,400 for anyone listed on that tax return. If the taxpayer did not receive it for that individual, then when they filed their 2021 tax return, that's when they would receive that additional amount. So the third stimulus was the $1,400 was listed on the 2021 tax return. Kind of going back and talking about the second stimulus, there was some confusion for individuals because the second stimulus was kind of like right at the end of December in January, but it was because of the tax provision. When it was passed, it got moved, it got allotted to the 2020 tax return. So even if they received it in 2021, January 2021, it was still deemed for the 2020 tax year. And again, at the very bottom, I have cut off the self-employed sick leave credit. So again, that is for those self-employed individuals that caught COVID, maybe had to take care of a child, reduce their time of working to take care of a child that was not in daycare, that they had to pull out of daycare, their daycare closed, or they had to care for someone else in their household that had COVID. They were able to take the sick leave credit, and again, for that credit, able to use their 2019 information for the credit if their 2019 net income was higher. Okay, and on to this year. So what are some of the new things for 2022? Of course, there's always the incremental increases for inflation, like the standard deduction or the threshold amount for who can be claimed as a qualifying child. But these are some of the big things that I took out from 2022. So 2022 was the third and last year that the 1099 income, 1099 our income was spread over 3 years. So that was a third that was reported for each year. If there was any federal tax withheld, that's all reported in that first year, that 2020 year. Again, the IRS has allowed 100% business deduction of food and beverage expenses paid to restaurants. Again, these are for those self-employed sole proprietors where no, you're not just eating because you have to have a lunch break. This is, you're actually conducting business. So again, you're meeting with customers, clients, prospective business clients, or actual business clients on there. So it has to be a business purpose, not just having lunch or dinner, breakfast, lunch or dinner on there. And so the IRS has allotted 100% business deduction. And then also for the months of January through June, typically for each year, you'll see the standard business mileage rate fluctuate up and down. But for 2022, they actually have two rates. So now when we have our clients, we're going to have to ask them, you know, what was their mileage? Can we get their mileage for January through June or July through December? So even if they do a half, we'll probably just split it. So you'll see January through June, the business mileage is 58.5 cents per mile. And then July through December is 62.5 cents per mile. And so I'm a big proponent for the standard mileage rate versus actual expenses on here. So definitely getting the miles on here. This is something that's different. So if you already have your tax prepared, that knowing that, yes, they're probably going to ask you for a breakdown of those mileage, of that business mileage, or they're just going to take your total mileage and kind of split it down the middle. Also an increase was the educator expenses. So these are for our teachers, our teacher aide, our counselors, our principals, anyone within the educational area for kindergarten going all the way up to 12th grade. If you have at least 900 hours that you spent in the educational, again, from kindergarten to 9th grade, so it doesn't factor in, I forgot what the 3-year-olds are, Head Start, it doesn't factor in Head Start or pre-K on there. This will be for their supplies. If these teachers, these educators, if they pay for supplies, and what the IRS allows is also for PPE equipment. So anything COVID related, hand sanitizer, masks, face shields, desk shields, that's also being included in any classroom supplies. Historically, it's been $250 per taxpayer spouse if both of them are educators. So they have increased it to $300. Still don't think it's enough because it seems like a lot, teachers are buying a bulk or a lot of supplies, but they have increased the educator expenses to $300 per taxpayer spouse for the 2022 tax year. And then the additional child tax credit. Prior to COVID, it was up to $1,400. Now it's at $1,500. I would probably bank on probably seeing this, probably make an adjustment again for the 2023 tax year. But the additional child tax credit, it is kind of a component of the child tax credit. The child tax credit, it has went back down to the age, under the age of 17. So that means individuals 2022, if they were 16 or younger, could qualify a taxpayer spouse for the child tax credit, as well as a taxpayer spouse could probably get the additional child tax credit amount of $1,500. And then the earned income credit, it's back down to its age of 2025 to under 65 on there. So it's no longer from like previous year up to starting at age 19 and then maxing out where there was no age max on there.
Hey, Lakesha, I'm not sure what slide this is for you, but we have probably about 10 minutes.
Okay.
Just want to let you know that.
Okay, thank you. So just giving you guys the tips for 2022. So this is the standard deduction for most people. So for a single married filing separate return, the standard deduction is $12,950. Married filing joint, $25,900. Head of household, $19,400. This is kind of like the chart that's also using to kind of determine if a person helps us determine if a person has a filing requirement. If your gross income, if all of your income exceeds this amount, then in most cases, an individual would have a filing requirement. Let's see. And because this is like for the home buyers class, definitely when the Tax Cut Job Act got implemented, it kicked off for tax year 2018, and it goes all the way to tax year 2025. It really eliminated a lot of individuals from itemizing, which was a benefit from being a homeowner, just definitely a beginning homeowner. But if you're able to itemize, which that previous slide, so a single individual, go back to it, their standard deduction is $12,950. A single person would, in order to itemize, they will want their expenses more than the $12,950. So that means their taxes, real estate taxes, sales tax would need to be more than the $12,950. It's limited to $10,000 per return. So if your taxes are maxed at 10, you still need a $2,950. So then it comes from your mortgage interest, your MIP, as well as gifts to charity. There's possible some casualty theft losses. And then there's certain miscellaneous deductions, gambling losses to the extent of winnings. So what I've kind of reflected is majority of those expenses that are dollar for dollar that you can kind of look at to put you over that $12,950 threshold in order to itemize on there. You'll see state and local income tax. Texas, we do not have state local taxes, but if someone came from another state from 2022, then yes, they would have that. But again, just from at our sites, we haven't seen a lot of people being able to itemize. That has drastically decreased, again, because the standard deduction has almost doubled with the Tax Cut and Job Act. So that eliminates individuals from having to allocate and have all of those expenses to record.
Okay, Lakesha, we have one question from Sharon. She asked, what's the income limit to receive the free assistance from your organization?
So we really don't have a set income limit. It's more so with scope. So with our VITA program, typically most of our clients, their income is over 60, under the 60,000. So that's typically what we broadcast, up to 60,000. But if it is a little bit over that, then you're still more than welcome to go to our site locations. A lot of it has to do more so in scope. We have to adhere to IRS guidelines on certain returns that we can do. So people that have rental property, that's out of scope for us. But if it's a W-2, retirement income, Social Security income, that would be still in scope. So even if your income, I would say, would be like 80,000, that would still be in scope if it was strictly, if it was like W-2 income or retirement income. It's more so the type of income, again, rental income, that will kind of make the return out of scope. We don't do any business returns. When I say business, like LLC corporate returns, we don't do partnership returns on there.
Okay, and just to reiterate, Lakesha, all your services are free, right?
Correct, yes.
Right. Okay, thank you.
You're welcome. So if anyone is interested in volunteering, typically our major role is a tax preparer on there. So we are still doing our training right now. That's going to go until the end of this month. Our training is offered in person. It's offered virtually, and then we also have recorded YouTube videos that a person is able to watch in order to certify at the advanced level. So we're also, in addition to the taxpayer, we like to have translators. So if you have someone that is, if you're fluent in Spanish, a lot of our sites, we have a lot of heavily Spanish speaking community. If you want to just come and help us translate, you can. If you're wanting to get involved, you can send an email to my coworker, Jonathan Hale. You have his email at the bottom, and he'll be able to provide you with the additional steps to register and volunteer with us. Again, our season goes all the way till April 18th. So you still have time to kind of think about it, again, and decide if you are interested, if you would like to volunteer with us. Again, ways that you can connect with us, our Facebook page, going to our website, and then down below we have our text. So you can subscribe to our text by texting tax centers to the 833-939-1387. And then as we have special events, maybe if for inclement weather, something happens at one of our site locations, if we have to get any information out, that would be another means of communication that we would send out through our text on there. So we have the various streams to communicate with the public. Okay, and Annie, I think that is it. I don't know if we have any other questions.
Yeah, so everyone, if you have any additional questions for Lakesha, please do post them in our chat. We will be taking a look at that. I'm going to stop sharing your screen right now.
Okay.
Thank you. I'm going to pull back up a screenshot that we have, and I'll allow Marianne to go over a few updates from us and some future workshops. But once again, if you have a question for Lakesha, please do feel free to pose them, and we'll get to them right before we end. So Marianne, let me share my screen again.
Thank you.
All right, there you go.
All right. Can everyone hear me, I hope?
We can.
Thank you so much for joining us this evening. And once again, great job, Lakesha. I almost wish we had an hour and a half. That's some great information. And I'll definitely be reviewing my presentation over and over. Moving further, please don't forget that South Fair does offer free mortgage readiness services and counseling. And of course, all our services are free, and we're available from Monday through Thursday, 9 a.m. to 4 p.m. I also work one late Wednesday a month, and we'll still work one Saturday a month. So if you have an idea that you might want to consider seeing where your home buyer power is, let's do it. If you're paying over $1,500 in rent or $2,200, like I see some downtown renters are paying, I think it might be time to find out where your buying power is. Moving forward, educational wise, I've already put it in the chat. Our next workshop, we're celebrating America Saves Week. And that's because since 2007, America Saves Week has been an annual celebration for everyday Americans to commit to saving successfully, with organizing support in this effort, and also to get an individual plan and working on implementing it. And we're here to help you. Thank you so much. And Annie, thank you. And thank you, Lakesha.
All right. No, thank you. We appreciate it. So any other questions for Lakesha? She did put up her contact information, but we will also be sharing her presentation. So you'll have her contact information that way as well. Lakesha, once again, thank you so much. You are
Great
so
job.
knowledgeable, and it just made me realize how much I don't know about tax returns, maybe.
I hope you guys were able to digest all of it.
I know Marianne made a good point. Review the recording again and again.
Oh,
Right?
absolutely. Absolutely.
All right.
Absolutely.
Well,
Thank
thanks
you.
everyone for joining us. We appreciate your time this evening. Good night.
Good night.